Your mortgage payment is probably your biggest monthly expense, right? But do you actually know what's included in your mortgage payment? Let me break it down for you. Check out the links in my bio if you have any questions regarding mortgages, refinancing, or anything real estate related. I'd love to help. First up, and probably most important, is your principal. Principal is the part of the payment that goes towards paying off the balance of your loan or the money that you borrowed. Well, and then that brings us to number 2, interest. It's everyone's least favorite part of the mortgage. And interest is essentially the cost of doing business or the fee associated with letting you borrow that money. A lot of people don't like the fact that the first few years of your mortgage, most of your payment actually goes towards interest, then to principal, and towards the end of your mortgage, that ratio gets flipped around. Most of your payment goes towards your principal and less of it goes towards the interest. Next up are taxes. No way around this. This is the portion of your payment that goes towards the taxes that are assessed on the property that you purchased. Typically, your annual property tax is divided among your monthly mortgage payments and held in an escrow account. And then whoever services your mortgage loan will then pay off your property taxes when they're due. No matter where you live, you're gonna have to pay property taxes on your home. These taxes go to your local government to fund things like schools, roads, fire departments, you name it. Next part of your payment goes towards insurance. A few different types of insurance, 2 more general types. The first one being homeowners insurance and the second being a mortgage insurance. So for homeowners insurance, this is the portion of your payment that goes towards your homeowners insurance premium. Now, insurance isn't technically legally required to own a home, but lenders do require it to protect their interest. And then we have mortgage insurance. If you put less than 20% down, you'll be paying private mortgage insurance, or PMI, to protect the lender against default. And in most cases, you'll be paying this premium until you have at least 20% equity in that property. For government loan programs such as FHA, you'll be paying a mortgage insurance premium, or MIP, for the life of your loan. And lastly, but not least, is H.O.A, or homeowners associations. Sometimes people forget about those, but that's also included in your monthly payment. If you don't live in an HOA community, you're fine, you won't have that extra payment. But some of us do live in HOAs, and some of those HOAs can be very pricey, some in the hundreds of dollars per month, some even higher than that. But that'll also be an extra cost that you have to add to your monthly payment and account for when you're budgeting.